Becoming a first-time homebuyer is a dream for many, but the process is complex and can be challenging to navigate. For starters, it is important to know whether you qualify as a first-time homebuyer, because government programs are earmarked to help you climb onto the property ladder. Here is an in-depth analysis of your loan options, your credit score, and steps to buy your first home. For the mortgage professionals out there, who are our long-time readers, pass this along to all your first-time homebuyers early in the process to help them along. So, in this video, we will discuss some steps to buy first home in the USA. Hello and welcome to the Money Manda YouTube channel. Hit the subscribe button and press the bell icon for more informative and amazing videos. Let's get started. What is meant by a first-time buyer? The basic definition of a first-time buyer is a person purchasing a home who has previously not owned a home and has no property to sell. Essentially, if you are a first-time buyer, you do not own a home, you are not an investor, and you are not currently mortgaging or remortgaging a house. Who qualifies? The following is a breakdown of who typically qualifies as a first-time buyer. You have not owned a principal residence for 3 years. If your spouse has owned a home and you have not, you can buy a property together and still be considered first-time buyers. You are a single parent who has only owned a property with your ex-spouse when you were married. You are a displaced homemaker who has only owned property with your former spouse. You are someone who has only owned a principal residence that is not permanently attached to a foundation as defined under applicable regulations. You have owned a home that was not in compliance with local, state, or model building codes. Benefits of being a first-time homebuyer. Buying the home is still considered a key aspect of the American dream, as a home is typically an appreciating asset that grows in value over time. Being a first-time buyer can open the door to tax breaks and federally backed loans. You may also be able to take advantage of down payment assistance or closing cost assistance programs as a first-time buyer. These programs, which can be operated by state governments and nonprofit organizations, can provide you with funding to cover your down payment and closing costs in order to make your home ownership dream a reality. What are the steps to buying a home for the first time? Purchasing a property takes time and effort. You have to know the details. Now that we have the basic steps, let's take a closer look. Here is a breakdown of the process for first-time homebuyers. 1. Research everything. You should know from the outset what you are looking for. A good start is checking online and in newspapers and magazines to scour real estate listings. If you find a house that you are interested in, it is good to make a note and see how long the property has been on the market. You will also want to note changes in the asking price. Not only will it help you determine what you can afford, but it will give you an idea of housing trends in different neighborhoods. 2. What can you afford? Usually, lenders say that you should look for a house that costs no more than 5 times your annual household income. This is often the case if you make a 20% down payment and have a reasonable number of other debts. This is where an affordability calculator might come in handy. 3. Pre-qualified, pre-approved. You should determine how much you can spend on a home even before you start your search. Getting pre-qualified for a mortgage is a great way to do that. All you have to do to get pre-qualified is provide your financial information to your lender. Some things they will look for are your income and savings and any investments that you might have. After reviewing this information, your lender will then tell you how much they will be able to lend you, which will also give you the price range of properties you can afford. 4. Real estate agent. When you are buying or selling a property, real estate agents are crucial, providing you with useful information on houses and neighborhoods that are otherwise inaccessible to the public. Not only do real estate agents offer expertise on properties, but they also have top-tier negotiating skills and knowledge of different areas. Perhaps the major perk is that real estate agents make commissions on home sales and purchases, meaning it does not necessarily have to cost you anything. 5. Shop offer. When you have found a property in your price range, it is time to start touring. Keep a checklist. If you are shopping seriously and see a lot of homes, you may need it. Some of the things you will want to look for include: test the plumbing by turning on the shower to gauge the water pressure and how long the hot water takes. Switch the lights off and on to test the electrical system. Test the windows and doors to ensure they open and close properly. In terms of the neighborhood, you may also want to note the following. What conditions are the other homes on the block in? Is the street traffic heavy? What is the parking situation like for you and your visitors? Is it located near shops and amenities you will use regularly? 6. Home inspection. This is a step that will dictate the final sale. For instance, signs of any structural damage that may require repairs are scrutinized during home inspections. Within a couple of days of the seller accepting your offer, your real estate agent will help set up the inspection. This is an important step because it protects you, providing an opportunity to renegotiate your offer or withdraw it without suffering any penalties in the event of significant damage. 7. Select a loan. You will want to work with your mortgage banker for this step. Most lenders offer numerous competitively priced loan programs and great customer service. Mortgage bankers are there to make your job easier. It is important to find a loan that is tailored to your specific financial needs and situation. Want to keep your monthly payment as low as possible? Do you want to ensure your monthly payments never increase? This is where a mortgage banker can you out. 8. Home appraisal. Lenders get an appraiser to give you an independent estimate on the value of the property you are purchasing. Appraisers are third-party company members that are not associated with your lender. These people inform everyone involved about the value of the property. 9. Paperwork. Your lender will sort out a title company to complete the paperwork, ensuring you are the rightful owner of the property you are purchasing. There are a lot of I's to dot and T's to cross, making this an important step to prepare yourself for. 10. Close the deal. On closing day, all parties involved, the seller, the buyer, and their various representatives, will sign the papers officially sealing the deal. Parties may not always need to be present for the official closing. DocuSign, as well as new remote notarization laws that are gaining popularity because of the pandemic, have increasingly digitized the process. Buyers must bring a check to cover closing costs, including title search fees, attorney's fees, transfer taxes, and homeowner's insurance. When all the documents have been signed and all funds have been properly distributed, the deed of ownership will be transferred to you. The bottom line. This overview should help put you on the path to filling in any gaps in your home buying knowledge. Remember that the more you educate yourself about the process beforehand, the less stressful it will be, and the more likely you will be to get the house you want for a price you can afford. That includes researching and comparing the best mortgage rates. When all is said and done, you'll have the confidence that comes from successfully negotiating a major step in your life. So guys, that's all about today's topic. See you soon in the next video. Goodbye.